Good morning all. Our topic is rights and privileges of shareholders. Before moving to the rights and privileges of shareholders, we want to know who is a shareholder. Individuals that own common shares of the company stock are viewed as true owners of that company. A common shareholder has specific privileges and rights. Shareholders may also have share in a company's profits by receiving cash or stock payments from the company, which is called dividends. Common shareholders can also influence a company's management by voting to elect the board of directors who appoint the CEO. If a company issues new shares to the public, current shareholders have the right to buy shares before they are offered to new shareholders. Next one is levels of ownership rights. Every company has a hierarchical structure of rights and it is classified into three main classes of securities that the companies issue. The first one is bond, second one is preferred stock, and third one is common stock. During insolvency proceedings, the creditors are the first to have their outstanding debts paid from the company's assets. The bondholders are the next priority, followed by preferred shareholders and finally the common shareholders. A company's charter typically states that only the common stockholders have voting privileges and preferred stockholders must receive dividends before common stockholders. The rights of bondholders are determined differently because a bond agreement represents a contract between the issuer and the bondholder. The payments and privileges the bondholder receives are governed by the indenture or the tenets of the contract. Next, we are moving to the rights of shareholders, which are common in nature. The first major right of shareholder is voting power on major issues. Voting power includes electing directors and proposals for fundamental changes affecting the company, such as mergers or liquidation. Voting takes place at the company's annual meeting. If the shareholder cannot attend, they can do so by proxy and mail in their vote. Ownership in a portion of the company. When business thrives, the common shareholders own a piece of something that has value. Common shareholders have a claim on a portion of the assets owned by the company. As these assets generate profits and as the profits are reinvested in additional assets, shareholders see a return as the value of their shares increase as stock prices rise. Next one is the right to transfer ownership. The right to transfer ownership means shareholders are allowed to trade their stock on an exchange. The right to transfer ownership might seem, but the liquidity provided by stock exchanges is important. Liquidity means the degree to which an asset or security can be quickly bought or sold in the market without affecting the asset price, which is one of the key factors that differentiate stocks from an investment such as real estate. The next right of shareholder is an entitlement to dividends. Along with a claim on assets, investors also receive a claim to any profits of the company pays out in the form of a dividend. Management of a company essentially has two options with the profits. They can be reinvested back into the firm or paid out in the form of a dividend. However, when dividends are declared, common shareholders are entitled to receive their share. The next one is opportunity to inspect corporate books and records. Regulations require that public companies release their financials in the form of two annual reports. One for the Securities and Exchange Commission, that is SEC, and one for the shareholders. The next one is the right to sue for wrongful acts. Suing a company typically takes the form of a shareholder class action laws. Shareholder rights vary from state to state and country to country. So it is important that investors check with local authorities and public watchdog groups. In North America, however, shareholders' rights tend to be standard for the purchase of any common stock. These rights are crucial for the protection of shareholders from poor management. That's all about the rights and privileges of shareholders. Thank you.